All right, I think it's time to get started. So hello everyone and welcome to today's webinar. My name is Anu Sood and I'm the Director of Product Management at Alessa and today's moderator. So for those of you who attended our last webinar on the FinCEN travel rule, many of you had questions about virtual currency transactions. And so for that reason, we decided to run this presentation again on how to comply with FinCEN's rules for virtual currencies. So specifically, we're going to be looking at FinCEN's rules for banks when it comes to virtual currency actors and transactions, red flags and money laundering typologies for virtual currencies that are worth noting, and a few case studies that illustrate some of the compliance pitfalls for banks and how they can overcome them and comply with regulations. So here's a little bit about today's presenter. Today's presenter is Dave Jevans. Dave is the founder and CEO of CipherTrace. He's a serial entrepreneur and industry expert on blockchain security, internet fraud, and cybersecurity. And he has advised Congress on these topics and is frequently quoted by the media, including American Banker, Bloomberg TV, CIO Magazine, and the Washington Post. He also speaks frequently at events around the world on the blockchain, cryptocurrencies, and electronic crime. Dave is also the founder and chairman of apwg.org, a security nonprofit with over 1,500 corporate and government members that produces the Electronic Crime Symposium, bringing cutting-edge research from emerging PhD students to a global stage. APWG also operates the eCrime Exchange, a real-time data exchange for sharing phishing, malicious IPs, and criminal cryptocurrency addresses. So Dave, as you go through the presentation, he will provide you with all sorts of insights that are worth noting. So you will really enjoy this presentation. So with that, I'd like to hand over the presentation over to Dave.
Thank you, Anu, and welcome everybody. As you saw, you're welcome to submit questions through the webinar interface. So the focus of today's presentation is to look at regulatory obligations that financial institutions have for monitoring and mitigating risks associated with virtual assets, particularly with relation to money laundering and terrorist financing. And it's designed for every type of financial institution, not those that only bank cryptocurrency companies, but everybody. And we're going to talk about how the CipherTrace Alessa offering works together and can help you get a handle on these risks. And for future webinars, we're planning on doing one about how you can safely bank cryptocurrency companies. And we may do another one around how you can provide digital asset custody services. Because as you may know, the Office of the Comptroller of the Currency in the United States has basically said that anyone who is a bank may provide digital custody services for a range of virtual assets. And I think this trend we see it expanding all through Europe and North America and into Asia as well. So the agenda for today's webinar is we'll look at what the specific FinCEN guidance is. We'll also look at Financial Action Task Force guidance, which is more of a global framework for regulators who are looking at how virtual currencies interact with fiat currencies. We'll talk a little bit about what the intelligence is, how you get it, how you can integrate it into your anti-money laundering and compliance programs today and detect cryptocurrency risks. And we'll do a couple of case studies and take questions along the way. So as everyone knows, it's been an exciting 12 months for the virtual currency and digital asset industry. When I gave this presentation a few months ago, numbers were vastly different, but you can see here today with the explosive growth in cryptocurrencies over the last 4 to 6 months, We now can see that Bitcoin in particular, but all the other virtual currencies are becoming serious payment instruments. So CipherTrace, using our blockchain analytics technologies, which is the cornerstone of all of our compliance and anti-money laundering and financial investigation tools, detected almost $4.5 trillion US worth of cryptocurrency payments last year, up from about 1.3 trillion in 2019. So there's tremendous growth. If you think about the payments volume across these cryptocurrency systems and the different blockchains, including Bitcoin, it's starting to be about 30% of all credit card transactions on an annualized basis. So this is pretty tremendous. It took 50 years for the credit card industry to go from 0 to 14 trillion per year in payments, and it took cryptocurrencies 10 years to go from 0 to almost 4.5 trillion. So the growth is quite astounding. The interesting thing when you think about virtual currencies is that all of it starts and ends at banks or a money service business. Somebody's got to purchase those crypto assets with fiat currency, whether it's US dollars, Canadian dollars, yen, pounds, or euros. And then at the end of the day, to get value out of the system, you have to go and convert it back and get it into your bank account or into cash or load it onto a credit or debit card. So financial institutions play an absolute crucial role in the entire cryptocurrency value chain. And this is why there are regulations and updated regulations on how banks not only can participate in it, but how they should also participate in the mitigation of risk and how filing suspicious activity reports, doing monitoring and risk-based controls is important. So I'd like to go through a bit of terminology before we get deep into it, because there are some terms you may be familiar with and some that you may not be, and they get bandied around quite a bit. Now, the first one is VASP. This is a virtual asset service provider. It's a bit of a clumsy name if you ask me, but it was effectively a term that was invented by regulators. So FinCEN and Financial Action Task Force kind of came up with it. So it's now a term of art, which basically means any business, a commercial business that facilitates digital asset transactions or cryptocurrencies. So that could mean a cryptocurrency exchange where you can buy and sell crypto. It could mean a custody solution, an over-the-counter trading desk, any of these things. It could be a cryptocurrency ATM. These are all VASPs. So we also see a VC or CVC. This basically means a virtual currency, or what some of the regulators like to call it a convertible virtual currency, meaning you can convert it either from one currency to another. So I might be able to go from Bitcoin to Ethereum. Then more importantly, it means conversion into fiat. It means I can convert Bitcoin into dollars. And then you'll also see this term that's becoming more and more important in the regulations, particularly in 2021. This is this concept of a peer-to-peer transaction or a non-custodial wallet. Some of the regulators are using the term an unhosted wallet. What this means is it's a cryptocurrency wallet software, for example, that resides on a person's computer or on their phone and is not hosted by a business. So for example, if I have a cryptocurrency account at a cryptocurrency exchange, let's just name Coinbase as one of them that you may have heard of. If I have an account at Coinbase, that is called a hosted wallet, and that's hosted at a VASP. But I can also transfer money to my computer. I can transfer money to my phone, And that right now has no controls. And that was what they mean by an unhosted wallet. Now, if I were to send money from my iPhone to your computer, that would be a peer-to-peer transaction, a P2P transaction. And we're starting to see a lot of regulation and proposed regulation from FinCEN, FATF, and other regulatory agencies around the world that are proposing regulations around tracking of transactions from not just from VASP to VASP, so the way we track them today, bank to bank, but also from VASPs to these unhosted wallets. Kind of a controversial topic these days. An AEC, this is an anonymity enhanced cryptocurrency. So Bitcoin, for example, is highly traceable, and that's what CipherTrace does as a core part of our products, as we trace cryptocurrencies all the way through the currency transaction chain, identify bad actors, criminal activity, good activity, etc. But these AECs are designed to make detection and tracking much more difficult. They are really designed as privacy protocols. And the most popular ones you're going to hear about in the industry are Monero, and then laterally Zcash and Dash. So Monero tends to be the one that's getting the most research and development in it. It's also the one most widely promoted on dark markets, which are criminal websites that are usually used for either buying and selling of drugs or buying and selling of stolen bank account information and stolen credit cards. An exchange, so that's a term that I think everyone will be probably familiar with, but an online service or a VASP that's used to trade assets. And there's really two types. There's exchanges that are purely crypto to crypto, and there's exchanges that also have bank accounts and allow you to use credit and debit cards so they can accept wires, send wires in and out, etc. And then the last, I would say, interesting term that is somewhat nebulous to people is DeFi and DEXs. So DeFi is this notion that has exploded in the last 6 months, meaning instead of having a centralized business, like we would have our banks with our bank accounts, you might have a stock exchange or a broker that has customer accounts, and they actually hold the money. These DeFi systems are trying to basically build decentralized systems where everything's done by software that runs on a blockchain, typically on the Ethereum blockchain, meaning that they provide a market for people to be able to trade, but they never actually take possession of the funds. So they effectively set up an order. If I say I want to swap Bitcoin for XRP, which is Ripple, you go to one of these DeFi services. One of them is called Uniswap. There's another one that's well known called SushiSwap, and there's many others. And you can basically go on there and you can perform trades with other people. They don't actually custody the funds, which in today's world means there's no AML requirement. There's no KYC requirement because they're technically not money service businesses, even though they're facilitating the movement of money. My personal opinion of it is that that's probably going to change over the next 6 to 8 months as far as a regulatory perspective on it, because the bad guys have figured out that if there's no KYC and no AML controls of any kind and no reporting regulations and requirements, that's a great place to launder funds. But there's also a lot of value in DeFi as well, a lot of innovation, ways to lend cryptocurrency to people, borrow cryptocurrency, get leverage, which of course is a double-edged sword, but some of these sites will let you have over 100 times leverage. Great when the market's going up, I suppose. Dangerous when the market's coming down. So today, unregulated space, but something to be aware of. So let's look about the where FinCEN is today. Their guidance that they have repeated a number of times over the last 12 months is that banks have to be, this is literally their words, thinking about their crypto exposure, and that examiners are being trained to ask banks and other money service businesses, other financial institutions, what they know about crypto across their fiat payment rails. Are they banking any crypto companies? Do they have any money service businesses that are in crypto? And be able to understand, explain how you're detecting it and what risk mitigation strategies you have. Now, the BSA obligations, your Bank Secrecy Act obligations, apply to, remember, all types of transactions. If you have, for example, somebody who is operating a cryptocurrency-based money service business off your bank accounts, you have to treat them like any other MSB, meaning there's an enhanced due diligence process. You have to understand and request what they're doing for their KYC and AML processes the same way you would bank any other MSB. The interesting thing is, in the crypto world, there's a lot of these businesses operating off bank accounts that do not declare that that's what they're doing. So it is part of your BSA obligations to identify these illicit MSBs or unregistered MSBs and to apply the same level of care that you would for any other money service business you might provide banking services for. You also have to understand how virtual currencies, even across your fiat payment rails, may be risky and may trigger an event that requires an investigation and potential filing of a suspicious activity report. I think the challenge here is that most financial institutions really lack visibility around what's happening in crypto and how their customers are using it, whether they have suspicious activity happening that's using their bank accounts or their credit and debit cards, whether they're accidentally banking a crypto company. In fact, in our surveys of hundreds of banks, we found that only about 20 to 22% have any kind of monitoring system to be able to look at their wire transfers, their ACHs, their credit and debit cards, and determine with any level of reliability whether those are cryptocurrency related or not, or whether someone's actually running a cryptocurrency money service business on their accounts. And when we took a look at the top 10 banks in the United States, 8 out of 10 of them were unknowingly hosting cryptocurrency money service businesses on their bank accounts. And the reason that it's only 8 out of 10 is that 2 of the top 10 banks in the United States are corporate-only banks that don't have any kind of retail. Our analysis working with customers at CipherTrace is that on the larger side of banks, some of the banks are processing over $2 billion a year of cryptocurrency-related transactions without actually knowing that they're doing it, without fulfilling any of their BSA obligations around understanding it, filing SARs, doing EDD, enhanced due diligence on those money service businesses. So there is a distinct lack of visibility right now, and that's one of the capabilities that CipherTrace brings in combination with Alessa to financial institutions to be able to get visibility into what's happening across your payment systems, your various payment systems, what is the risk, and then providing tools to the compliance teams to be able to determine whether they need to de-risk a customer, whether they need to do an investigation, whether they need to file a SAR, or whether everything's fine. Criminals today are taking advantage of banks through the crypto channel to launder funds and to operate businesses such as drugs marketplaces, financial crime marketplaces, to operate scams such as unemployment refund scams, so tax refunds, but also a lot of unemployment scams, particularly in this year of COVID, where governments have been handing out quite a bit of unemployment or other benefits. We're starting to see there are organized gangs that are filing false information, getting these unemployment benefits, and then immediately turning them into cryptocurrencies. and then bringing them back through another bank. So then they have a clean set of funds, and there's no clear way to link those things together. So we've been working at CipherTrace with a number of financial institutions to start detecting this type of activity. In particular, one case study I would give you is a financial institution that issues prepaid debit cards for some of these unemployment and other COVID-related benefit schemes that the government is offering, and to look at where those are actually being used. And you can actually see clusters of cards that are being used immediately to purchase cryptocurrencies at certain exchanges that have very little to no KYC. So highly suspicious. They tend to be clusters of cards that were allocated in a given area, given region, and you can see immediately that they're not using them for legit purposes. They're just converting it instantly into crypto. Then that gets used and then brought back into the financial system. So let's look at a couple of high-profile cases. I'd say one of the high-profile ones has been BitMEX. So BitMEX is a US-based cryptocurrency exchange that headquartered itself in the Seychelles. And we'll talk about AML controls and regulations in a few minutes here, but the Seychelles effectively has no AML regulations or controls on businesses that don't provide financial services to residents of the country. So as you can imagine, that is a great place to domicile yourself so that you don't have to do any kind of regulatory compliance, even though you are serving customers in a regulated country. And so that's what BitMEX got in trouble with. So they have been charged by the Department of Justice and the CFTC because they were serving customers in North America, yet doing absolutely no KYC or anti-money laundering controls of any kind, not filing SARs because they had domiciled themselves in the Seychelles. And that's an ongoing case and quite a high-profile one. We've also seen a number of prosecutions. So we've seen an unlicensed crypto MSB who's pled guilty recently for laundering funds through a number of bank accounts. We had an arrest recently where a gentleman was fined $60 million for operating a money laundering mixing service. We'll talk about that in more detail. And of course, there are now cryptocurrency sanctions on various sanctions lists, including the OFAC lists, have now got cryptocurrency addresses associated with names and physical addresses of folks that are believed to be involved in money laundering for North Korea and other sanctioned entities. And I'd say another one which is of interest is on the cryptocurrency ATMs. And we'll go into a case study of that later in the webinar. But cryptocurrency ATMs are a real thing. It's growing extremely quickly. We'll talk about that a little bit later, but you will be, I think, surprised at the extreme growth of cryptocurrency ATMs. So let's take a look at an enforcement action at a U.S. bank. So in January, there was a cease and desist order effectively alleging that the bank was providing banking services to a number of digital asset customers, which included exchanges and ATM operators and arbitrage trading accounts and even developers, and was not performing due diligence, did not recognize that these were in fact cryptocurrency businesses that they were providing services for, and in effect their MSBs, and had not done enhanced due diligence on that. So they weren't able to detect, either through their onboarding process or ongoing process, that these companies were using their banking services. It's important to think about the onboarding process of customers, that you're able to detect whether that's actually a cryptocurrency company. But it's also important to have these monitoring tools that CipherTrace in combination with Alessa can bring, where you can monitor ongoing transactional activity for risk and see if it's actually crypto related. This is because many cryptocurrency companies lie when they're doing their account setup. They will tell you, oh, it's an online retailer, we're an e-commerce business, when in reality, they're actually a money services business and they're just trying to get bank accounts. One of the things that CipherTrace provides in our banking products is the ability to look at the bank accounts of various cryptocurrency companies and determine whether you're receiving funds from them, sending funds to them from your customers, or whether in fact your bank is actually providing those accounts. We know of one of these cryptocurrency companies that has over 30 bank accounts that they regularly use, and they keep many more open in case they get shut down and de-risked so they can move over to another bank quickly. And these accounts, I assure you, were not set up as cryptocurrency businesses. They're set up as e-commerce businesses. So another bust recently was with Helix. So this is a money laundering service. You may hear them described as mixers or tumblers or foggers, but these effectively are services where you can send in, let's say, your Bitcoin to them and pay a small servicing fee between 0.5% to 3% typically, and they tumble your money around with other people and send it back to you, other people's money. So you're paying this about, let's call it a 3% fee to be able to basically take your Bitcoin and get somebody else's Bitcoin in exchange and try to make it harder for people to trace that money where you sent it to. Oftentimes when we're investigating these dark marketplaces and other criminal sites, you'll see money comes out of them through one of these mixers and then gets sent to a cryptocurrency exchange. And then the exchange converts it into fiat currency and sends a wire transfer to the ultimate beneficiary. So these guys do a very good job trying to hide who they are. They obviously don't publish their name and address and phone numbers. But there was a successful bust in Ohio. And this gentleman was running a service called Helix. And it was alleged that he laundered over 300 million in Bitcoin. So let's get back to the regulations. So the first thing is, as we discussed, you have to know your customer, and that's the onboarding process, but it's also monitoring of their transactions to understand, was I lied to? Were they not completely truthful? Did they just hide that they're doing crypto? Or is this acting actually as a money mule account for operating a crypto money service business? You've also got to do detection about, are the source of payments suspicious or risky? So the same way that you do it today, which is you're monitoring where people send their funds to, you're monitoring how much money comes in, and is that appropriate to where the type of customer and what they said they do with their bank account. You've got to do the same thing and understand whether it's crypto or not. Understand, are there payments, for example, coming in regularly to a customer's account that is actually from an identified VASP, a virtual asset service provider, and is that VASP known to be risky? So for example, if you have a customer who's receiving $5,000 every 2 days from a known VASP that is known to have no KYC and facilitates quite a bit of criminal transactions, and that's something that CipherTrace can tell you, then that's actually a suspicious activity, and you may need to do an investigation and possibly file a SAR. So there's questions that FinCEN and other regulators, FINRA, and depending what country you're in, MAS in Singapore, FCA, et cetera, will ask. So you have to be able to answer, are there virtual currency related transactions flowing through my institution? Am I banking any cryptocurrency companies? Am I banking P2P exchanges, crypto MSBs, ATMs, or what many people call kiosks? So am I banking a cryptocurrency ATM company? And if so, what do I know about their KYC processes and their reporting and due diligence? And you'd be surprised who's operating these cryptocurrency ATM systems. Oftentimes it's a single person. They buy one, they buy two, they buy three. Suddenly the business grows and they've got 100 of them. So are these valid transactions? That's another question you'll be asked. So you want to be able to identify, could this be being used for money laundering? So are these transactions valid? And you need to be able to, as with any of your compliance programs, develop, document, and demonstrate compliance. So here's a summary of the core questions that you need to address, and the activity about development, documentation, demonstrating compliance. Now, the next thing to think about are the so-called red flag indicators. And there's a couple of sets of them, and I encourage you to take a look at some pretty interesting reading. The first one is what the Financial Action Task Force, or FATF, has put out. So if you Google FATF virtual currency red flags, it will take you directly to the FATF website, and you will be able to get that document. But it looks at transaction patterns, anonymity of customers, who's sending, receiving it, geographical risks. So for example, are these funds coming from an exchange that is, for example, domiciled in the Seychelles and has no KYC, yet they might have a bank account in the UK or a bank account in the United States? If you can identify that, these are the red flag type of things. So it's a great document to read, very well written. The other one is FinCEN has their own virtual currency red flags document, so you can Google that as well and get to the FinCEN website. And if you Google FinCEN virtual currency red flags, you'll get there. It gets into some more detail around identifying dark marketplace transactions. So these are these transactions that are running over the Tor network, or these services that are running over Tor that are facilitating illegal commerce, unregistered peer-to-peer transactions, foreign money service businesses, and the ATMs. When you do file a SAR to FinCEN, so that would be for anyone who has to file in the United States or has customers in the US, so you have to file with FinCEN. They're asking you to put this key term in the SAR so that they know how to index it as being cryptocurrency related versus credit or debit card or ACH or wire transfer fraud, etc. So they want you to put in a CVC Fin 2019-A003 in there. That helps them build their reports and identify it. They want to understand if you're getting cash deposits or wires that are being used to buy virtual currencies. Are you getting lots of deposits from a lot of different cryptocurrency providers into one account? That's probably a money mule or a criminal cash out account. And also to identify any contact information that you may have when people create accounts that could be actually related to the operation of a virtual asset service provider. So the other thing is looking at potential activity, so monitoring some of the activity. So if a customer is exchanging or receiving or sending funds to or from a cryptocurrency exchange that is unregistered, but they're in your jurisdiction, that's an indication of potentially illicit activity. And also if you have transactions that, even though the bank account may be in a legitimate country, you know it's registered to a VASC in a high-risk jurisdiction, that's a red flag. The other thing you need to think about are these kiosks, or as I like to call them, Bitcoin ATMs. So as I said, many of these operators basically will set up a personal bank account. Maybe it'll be a small corporate account, but typically it can be a personal account, and they'll go out and buy a number of these Bitcoin ATMs, put them in gas stations, put them in vape shops and other salubrious joints. Those can be often used for criminal activity. Surprise, surprise. So you want to understand if those businesses are operating at your bank and really get a tight handle on enhanced due diligence. Some of these are very good. CipherTrace has a product that works for ATM providers to do their due diligence on cryptocurrencies and cash coming in and out of them. But some of them are vehemently against any type of controls, and really those are the risky ones. And we talked about jurisdictional risk a little bit. That's one thing, but you also need to look at the risk of an individual cryptocurrency company. So let's say you're approached by a cryptocurrency company who says, I'd like to have banking services with you, or you find that one of your customers is receiving regular wire transfers from one of these virtual asset service providers. By monitoring your ACH, your wire transfers, your credit and debit card transfers, you're able to use a CipherTrace system in combination with Alessa to be able to identify this. You want to be able to look up in the CipherTrace tool set to see what kind of risk does that pose. And what we have found by looking at over 800 cryptocurrency companies in 80 countries is that more than half of them have extremely poor KYC. If you look, the ones in red had effectively what I call no KYC. I mean, their KYC is effectively give me your email address. Or they have what we call porous KYC, which means they'll allow you to do a certain number of transactions. Let's say they let you send 1 Bitcoin a day. Well, today that's about $50,000 per day with pretty much no KYC. And then if you do more than that, they will require you to do a higher level of KYC. And the ones in green have more what we would think of as the type of KYC you would request and require to create an online bank account. So more than half, it's about 56% of over 800 VASPs that we tested had poor or weak KYC. Now, when we analyze their transactions, and that's one of the beauties of blockchain, is that we can analyze transactions across all the blockchains. So we can see transaction histories that you can't get in the banking system today. That's one of the beauties of blockchain-based technologies, Bitcoin, Ethereum, any of the other ones out there. There's thousands of these different currencies. We can analyze across, right now CipherTrace supports 800, and we can see the transactional history of all these different entities. And we also track the criminal activity. So we can see, for example, who's a dark market, what's stolen funds, what's ransomware, and we can then map it across the transactional history. So we get a pretty decent understanding of whether a virtual asset service provider, an exchange, or what have you, is servicing criminal transactions. And it won't be a surprise to you that the correlation between whether you have strong KYC or weak KYC is directly related to how much criminal activity you have at a VASP. So that's one of the beauties, is that we can provide a risk rating of these virtual asset service providers that your customers may be using or that may be approaching you to open bank accounts. And we can say, here's over the last 4 years, what their transactional activity is, what percentage of it looks criminal, what percentage of it goes to other high-risk exchanges, what percent is ransomware payouts, etc. Okay, so when you're being examined, here's a couple of explanations that don't work. We don't do crypto. We don't bank crypto companies. We don't have to do anything. Or we know all our customers and none of them would do anything like that. Without having some sort of plan to be able to do your enhanced due diligence, to look at your transactions and understand which ones are cryptocurrency or not, to be able to discover if you have crypto companies operating that you didn't know about, you can't just plead ignorance and say, hey, we don't do it. We told people not to do that. That's not going to be sufficient. So there's again, I reference back to the Financial Action Task Force. So that is a group that comprises regulators from 190 countries that are doing a lot of work on virtual asset risks and controls. CipherTrace works very closely with them. In fact, we're putting a lot of work together around the so-called travel rule. And I sit on the board of a nonprofit, Trissa.io, the Travel Rule Information Sharing Alliance, that is focused on travel rule issues between virtual asset service providers, custody providers, et cetera, and working very closely with FATF. So a great place to get global guidance in addition to those red flag indicators. Let's jump into a couple of case studies, and then if we have time, we can take a couple of questions. So case study one, I promise I'd give you a little bit more information on these cryptocurrency kiosks. So this is a recent case. This gentleman was running cryptocurrency ATM in his smoke shop and he had not signed up for any form of AML service on his cryptocurrency ATM, and he was charged and pled guilty to distribution of drugs, operating an unlicensed MSB, money laundering, and failure to maintain an AML program. And he had accounts at a number of these, as you can see here, a couple of banks and a couple of well-known cryptocurrency exchanges. So remember, if you're a cryptocurrency ATM, you've got to have a bank account, and you probably need an exchange account in order to buy and sell the crypto that you're going to provide to the customers. So here's basically how it worked. Traffickers would send the Bitcoin that they got, so they're selling drugs online. They would send the Bitcoin to this person on his P2P exchange account, and then he had an account at Gemini to convert it into dollars, and the dollars were wired from those accounts to his bank accounts. Now, these cryptocurrency ATMs are quite interesting. As I mentioned, they're growing like crazy. 2 years ago, there were 4,000 of them. 3 years ago, there were 2,000 of them. 4 years ago, there were 1,000 of them. Get the trend? Last year, there were 8,000 of them. They're doubling every year. It's a big business. We have customers that have literally hundreds of these cryptocurrency ATMs. And, of course, with any ATM, you make money on fees. So typical ATM charges me, if it's not my bank's ATM, charges me $2 to $3 perhaps for a transaction, maybe a little bit more if I'm overseas. These virtual currency ATMs are charging about 12% is the average. 12%. Nobody's paying $120 in fees to move $1,000 through an ATM for benign purposes, in my opinion. So it's an area to look out for. There's good users of these things and bad users of these things. There's one down the street from me at a little gas station, and they put one of these on the wall, and I was curious and said, well, how do you ever get people using this thing at your gas station? He said, Friday night after payday, there's a line of people looking to use the Bitcoin ATM. So some of it's remittance. They're sending money back home, but it's more expensive than Western Union. So they're doing other things as well. Okay. second case study, and then we'll take a few questions. This is a case study that really, I think, applies to pretty much every bank out there, which is you need to be able to detect illicit MSBs that are using consumer or corporate bank accounts. One of the things that CipherTrace does is we are constantly out on the internet looking for these money service businesses that operate in crypto but are connected to bank accounts. And so we're updating this every day, is finding out who's operating them, what the bank accounts are, what are they offering to buy and sell, which currencies, etc. So here we were able to find an MSB that was banking at this particular customer of ours, and then that data is triggered off in the CipherTrace system, so the bank can go in and take a look at that customer. And what they found of this particular customer is that they had essentially set up a fictitious business. So they had a corporate account. They'd gone online and just created an account for a few $100 in an online service and said it was an internet business. And, it passed all the due diligence. They got their corporate account. But what they were doing was operating a crypto money service business. But it turns out when you actually looked at how this thing was operating, so they're selling cryptocurrency to people, the way they were getting paid was incoming wire transfers, obviously, but also, believe it or not, a lot of walk-up cash deposits all around the country. Every week, people were walking into branches and depositing thousands of dollars per day, 5 days a week, into these accounts, and it was all across the country. It turns out it was a nationwide money laundering and drug related to drugs. They had hundreds of people doing cash deposits all across the country that were then being converted into crypto and being sold off. So this is an example of how detecting cryptocurrency across your existing payment rails can help you find out actually serious crime that's happening on your accounts, whether it could be corporate. Many of these are also personal accounts as well. By implementing the CipherTrace system and tying it into their money laundering systems, this bank was able to see a 67% reduction in these types of businesses operating off their accounts. They would be seeing 70 accounts a month last year. We've been able to bring that down to less than 20, and I think with more automation, we should be able to get that down to 5 or 10. Now, there's always going to be bad guys. You're never going to have 0% fraud, but by deplatforming these guys, de-risking them, getting them off their accounts, people eventually figure it out and move to a different bank who isn't doing this type of diligence. Okay. So the challenge was to identify the accounts. They took a personalized data feed from CipherTrace, feed it into their money laundering systems. They could map account numbers, investigate the history, review the creation, file a SAR, and take remedial action. Interestingly, many times you'll find once we can identify that there's crypto activity, you can look at those accounts and you'll find that that person might have 5 other accounts that are also related with doing some form of suspicious activity. So it can be a trigger account to figure out, oh, they're actually doing other things, or they've registered crypto businesses, didn't register it with us, but now we know the name of them and we can find it. Okay. During onboarding, this is another important thing. If you're bringing on an individual, you want to identify if it's a P2P exchanger. If you're bringing on a business, you want to identify, am I accidentally onboarding a virtual asset service provider? Or if I'm doing it on purpose, I'd like to go and look at the history, the transactional history, what we think about their KYC, what is their transaction history over the last, say, 12 to 24 months. Are they known to be sending 20% of their transactions to shady places or 0.1%? And as we just looked at that case study, is it an unregistered money service business that is trying to use our accounts? Right, so what are they going to ask you? Typically, when they're assessing your AML program, what controls do you have to identify? Do you have peer-to-peer virtual currency customers operating, and how are you looking at that and finding out about it? What are you doing about these emerging payment systems, these virtual asset payment systems? And do you have the tools and methodologies to actually identify the suspicious activity? So that's what the examiners will ask you. And of course, it's not just FinCEN examiners, it's FFIEC examiners, other bank audit examiners, IRS, depending who you're regulated by. Here's an example of CipherTrace data in the Alessa toolset. So there's an integration of CipherTrace into Alessa. We do support other systems as well, and you have APIs. You can build it. If you have a custom system, you can integrate it together, but we're proud to be partners with Alessa on this project and this product. So here's an example where you can come in and look at one of these counterparties. Let's say you detect that a customer is doing a lot of transactions with Bit4 coin. You can come in and look at their KYC scores. Is it green? Is it yellow? Is it red? You can also take a look at, do they have high risk transactions? So here's a different one. This is Lightbit. You can see that there's several percent of transactions are going to high risk or criminal sites. So this may be an indication that they're historically or more recently they're being used for criminal activity. You can find out who their counterparties are, etc. So in summary, BSA obligations and other regulatory and compliance obligations apply to cryptocurrencies as well, and you need to be able to identify them and see how those might be affecting the risk of your customers. You will get asked questions by examiners. You do have an obligation to identify risky businesses and customers and identify if you've got money service businesses or peer-to-peer exchangers that are using your accounts. And you've got to have ongoing transaction monitoring as well as a good onboarding program.
So with that, I'd like to thank Dave again for the presentation. As you can see, there's a lot of interest. There's a lot of questions in this. It's a hot topic, and it is something that is top of mind for AML compliance. So we really appreciate your time. And to the folks who joined us, thank you. As always, we love having you. We love your questions. And we hope that, again, you will join us at the next presentation. So with that, I'd like to close off today's presentation. Have a great day.